Every Monday to Friday, this is Peter Lewis's Money Talk.
Money Talk.
Good morning, it's Thursday the 7th of September. This is Peter Lewis with the latest business and finance news and some great discussion on one of Hong Kong's most listened to financial podcasts, Money Talk. This podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 30 million customers across 10 countries. In today's headlines, US National Security Advisor Jake Sullivan has asked China to set aside its issues with India and play a constructive role in the upcoming G20 summit in New Delhi. Asked by a reporter at a press briefing if tensions between India and China would overshadow the summit, Mr. Sullivan said that was up to China, but if China wants to come in and play the role of spoiler, of course that option is available to them. But he added that the summit's chair, India, the United States and every other member of the G20 would encourage China to come in a constructive way on climate, on multilateral development bank reform, on debt relief, on technology, and set aside the geopolitical questions and really focus on problem solving and delivering for the developing countries. The European Commission on Wednesday listed 6 tech giants, Alphabet, Amazon, Apple, Meta, Microsoft and ByteDance, as gatekeepers under its new Digital Markets Act, a groundbreaking piece of legislation that aims to encourage greater competition in digital markets and ensure greater choice for consumers. The term gatekeepers refers to massive internet platforms which the EU views as restricting access to core platform services such as online search, advertising and messaging and communications. Activity in the US services sector rose the most in 6 months in August. The ISM Services PMI unexpectedly jumped to 54.5 compared to 52.7 in July and forecasts of 52.5. At the same time, price pressures intensified, with the prices paid component rising 2.1 percentage points to a 4-month high of 58.9 in August, suggesting inflationary pressures are building once again. Oil prices continued to rise on Wednesday after climbing above $90 a barrel for the first time in 2023 on Tuesday, as Saudi Arabia and Russia said they would extend their voluntary production cuts until the end of the year. Brent crude oil settled up 0.6% at a 10-month high of $90.60 a barrel. On today's programme, I'm joined by Andrew Freris, the CEO of Ecognosis Advisory, and Michelle Lam, Greater China Economist at Societe Generale Corporate and Investment Banking, and with a view from Taiwan is Ross Feingold, Business Development Director at SafePro Group.
Peter Lewis's Money Talk.
US stocks fell Wednesday as soaring oil prices and data pointing to a resilient US economy reignited inflation and rate hike fears. The S&P 500 dropped 0.7% to finish at 4,465. The Dow sank 199 points or 0.6% to end at 34,443. The Nasdaq Composite fell for a third straight day, shedding 1.1% to close at 13,872. Chipmaker Nvidia dropped more than 3% and Apple shares lost 3.6% after reports that China had ordered officials at central government agencies to not use iPhones and other foreign branded devices for work, and also after the EU designated the company as a gatekeeper. The yield on the US 10-year Treasury note hit 4.3% Wednesday as traders bet the Fed will keep interest rates high for a long period as the US economy continues to show signs of resilience. The US dollar index rose to a 6-month high of 104.84 Wednesday after the ISM Services PMI in the US unexpectedly rose to a 6-month high in August, while PMIs for China and Europe disappointed, which reignited concerns about the global economy. Chinese and Japanese authorities pushed back against the strong dollar. The Japanese yen depreciated past 147 per dollar to 147.64, its weakest level in over 10 months, and prompting officials to warn against excessive currency volatility. The current country's top currency diplomat, Masando Kanda, said that Japanese authorities won't rule out any options in the currency markets if speculative moves persist. And the renminbi slipped 0.2% to 7.3160 yuan in Shanghai after breaking through 7.32 renminbi earlier in the session in both onshore and offshore markets. The PBOC cut the yuan's fixing by 186 pips to 7.1969 per dollar on Wednesday. That's stronger than expectations by another record. On the mainland, the Shanghai Composite Index recovered from losses of 1% in the morning session to close 0.1% higher at 3,158. Hong Kong's Hang Seng Index also recovered from losses of 1% in the morning, slipping just 7 points to 18,450 by the end of the day. Chinese property giants rebounded in Hong Kong, pushing the Hang Seng Mainland Properties Index up by 3.6% on speculation that Beijing will roll out more support measures for the beleaguered real estate sector. China Evergrande led the gains, soaring almost 83%, and Sunac China surged over 68% to the highest level since early April, bringing its 3-day gains to 183%. Shimao soared over 53%, Country Garden jumped nearly 21%, and Longfor was up almost 5%. And in the futures markets this morning, Hang Seng futures pointing to a loss of about 0.2% for the Hang Seng. Looks like it's going to open at about 18,410 this morning. And you can get more details on the latest market movements in my daily newsletter at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
I'm joined now on this Thursday morning by Andrew Freris, who is the CEO of Ecognosis Advisory. Morning to you, Andrew.
Morning.
And also with us is Michelle Lamb, who is Greater China Economist at Societe Generale Corporate and Investment Banking. Very good morning to you, Michelle.
Good morning, Peter.
Let me ask you first, Michelle. Let me get your thoughts on China's economy, particularly this news about China cutting down payments and mortgage rates. China announced it's going to allow its largest cities to cut payments for home buyers. It's encouraging lenders to lower rates on existing mortgages. We've seen a huge rally in Chinese property stocks yesterday as a result of that. But how significant is this?
I think to some extent it will definitely improve the sentiment in the top tier cities. And as you see over the weekend, the number of transactions in the top tier cities seems to have picked up a little bit. And I think it also shows the willingness of the policymakers that even before they are concerned about speculative activities coming up again in the top tier cities, now they're really relaxing the measures there. So there's a willingness for that to actually support the property sales. The question here is, I'm not sure how long that is going to last, given that we know the mentality of Chinese households about investing in properties have completely changed. That's number one. And number two is that the low-tier cities, the property sales are still going to be pretty weak because we know that the structural factors are not going to be supportive. And at the end of the day, the low-tier cities is actually 70% of the property sales overall. So if we have this large share of sales revenue that's still tanking, I think that's not going to be very supportive to the developers, particularly for those that have large exposure to the low-tier cities, such as the Country Garden, for example. So I think that having said that, I think overall it means that maybe we are close to the bottom of the property sales. Maybe there's still going to be some downside, but last year the sales already dropped 30%, and in July and August it dropped another 20%. So that means that with all these sharp falls and some supportive measures, maybe we are closer to the bottom. But going forward, I don't think there is going to be strong recovery at all, given the structural factors. So, and I think that also means that the property is going to be still a drag on the overall economy.
Andrew, what are your thoughts here? Is it going to prompt people to go out now and buy property again?
I'm afraid and I'm delighted. I agree with practically everything Michelle said, but for different reasons. The reasons is I'm looking at the core of the problem. The core of the problem is, of course, prices of property have been coming down, and that reduced the cash flows to the property developers, and that led them to near bankruptcy. So how do you solve this? Well, one thing is to ignore completely what's happening in the property market and simply concentrate in rescuing the property developers on the basis that this will stop the tumbling down of prices. The other part is to increase demand. Now, demand in the property sector comes from two areas. Okay, one is from new buyers, completely new buyers, and the second is existing buyers buying and selling, moving on. So now, helping new buyers is going to be incredibly difficult because given the dreadful state of the property sector, I'm not surprised if they're going to sit on their hands and wait to see what happens. And as for existing buyers shifting or churning, again, we are going to hit the issue that they're not going to do it at the time that they may very well expect prices to come down. So the policymakers are faced with a completely hopeless task, which ultimately forces them to save and rescue the bankrupt property developers, which is, it's not an easy thing to do. So I'm very pessimistic going forward because the solutions are being continuously concentrated, possibly at the corner that marks and says, save the property developers.
Which is something that Beijing really doesn't want to do, does it? It's resisted that for a long time.
Absolutely. I'm not saying they're doing the wrong thing. Try to think it in steps. Again, you say, what is causing all this? The answer is, of course, is weak demand. Yeah. But then how do you increase demand? And then you have segments in the market. And I think new buyers are going to be very, very careful as to what they do. Actually, I also have the suspicion, and I'll finish, that the abrupt change in the COVID policy produced a body shock to morale and to expectations. In other words, this very sharp turnaround after 3 years might have caused people to take a deep breath, look back and see what has happened these 3 years and what's likely to go on forward. And the reaction to that is to be incredibly careful. Not as far as the policymakers are concerned, because I'm sure they must have had some pretty good reasons why they reversed it. But the truth is that I'm sure this did cause, this produced a real body blow. And we can't wriggle out of that.
Michelle, one of the things that's really needed to revive the property sector is price confidence amongst people in China. They need to have confidence that house prices are going to move back up again, and that's been pretty shattered, isn't it, over the past sort of year or so, because they're not used to experiencing the value of prices of their home prices going down. Do you think this will help that confidence come back?
I think one thing that China is still different is that it still has to close capital accounts, which means that even if they have big confidence in house prices, they can put the money in the bank accounts, but at the end of the day, the money needs to go somewhere, and it's not that easy for them to invest in overseas assets. So perhaps I think for the top tier cities, as we can see from the data, it is still it is falling, but it is still relatively resilient compared to the low tier cities, which means that why I think actually right now they are relaxing the measures in the top tier cities will help to revive the sentiment a little bit there at least. But I think for the low tier cities, it's going to be the dynamics is going to be very different, and I don't think the prices are going to. I think in the short term, definitely the price pressures are still coming down, and I don't think it's going to stabilize anytime soon. But at the same time, we've also have some government policies such as the price floors to stop the low tier cities from falling, and that's also the reason why some of the developers have struggled to sell the prices because of these the houses because of these price floors in the low tier cities. So I think with the government restrictions in place, it means that it's even harder for us to see a outright bottom in the low tier cities in a way which you could argue that it would be better to help us to see the bottom, and then maybe things can get better afterwards. But this kind of restrictions are really hindering you would say the price clearing process.
Mm-hmm. Andrew, where do you think the economy is overall now? We've had all the PMI data out, the official ones, the Caixin ones. They seem to, the official ones showed that manufacturing was improving, but still in contraction. The Caixin survey shows that the services sector is now starting to slowest pace since December, and their composite PMIs hit a 7-month low. What do you think of the state of the Chinese economy at the moment?
Well, there are two things with the PMI indices. leaving aside my traditional, I wouldn't say dislike, my traditional distrust for them, is they have been moving by small basis points, going from 51.2 to 51.3. It's not an improvement. It's not deterioration. But so in other words, you really need to see some pretty chunky moves before you say we're really turning around the corner. So as I said, I observe 18 separate indices in the Chinese economy, and except one or two of them, practically everything is either going down, still positive by going down, or negative and going down, which is bad news. And only two or three of them are relatively flat. So overall, the economy is not improving, unfortunately, if I simply want to look at numbers only. Never mind what I think, never mind what I project, never mind whether some of the indices are good indices, they are good guys as opposed to bad guys. And policymakers have got their job made up for them. It's not an easy task. And I feel always very constrained in coming forward with suggestions for improvement. The only thing which makes a lot of sense to me, but clearly it is a political issue, is that with a fiscal deficit that used to be about 2.8 and now possibly will go to 3%, good God, China can double that easily and nobody will blink. Neither will China. Okay, but that is a political issue. Okay, they are not willing to go down that way.
And they have a huge current account surplus, don't they? So they could easily spend money to boost the economy.
They have everything. This is not China becoming like Argentina, for example, because Argentina always had a huge current account deficit. They had an enormous net debt overseas. China is not a net debtor. It is not a net debtor. It's all its foreign exchange assets and everything else, including its current account surplus, adds up to a plus versus a minus. In other words, this is a net lender to the world. Net lenders don't go bankrupt.
So why doesn't it get out the big bazooka and boost demand? It could do so, couldn't it? It has the resources to do it.
Yeah. I suspect it might be a mixture of both macho politics. In other words, we are not going to borrow our way out of that. Look what happened to the United States, and I'll come to that in a moment. And the second part is expectations that other policy measures may very well work. In other words, tinkling with the monetary policy. Yeah, in a sense, one can see this. Okay, that big fiscal deficits might look a little bit as if it is an act of desperation, and it isn't. It's a very sensible policy act. But as I said, I'm not here to give advice to the Chinese policymakers, except make the observations that they can well afford, to open up the fiscal sluices.
Michelle, what are your thoughts on the state of the Chinese economy and what the authorities ought to try and do to support it more?
First of all, I think in August we should see some stabilization or even improvement at least. Because if you look at the official manufacturing PMI, it actually picked up a little bit. And we observe other high-frequency data that maybe the weather factors was hindering the production activity in July, and that should dissipate somewhat. And the inventories should also be less of a drag. So I think the August data may improve a little bit after the terrible July. Second is that on the Taising services PMI or the official services PMI, it actually dropped quite a bit. But I think I'm not very concerned about that, because the way that the PMI is constructed is that every month they ask people whether things have improved or deteriorated compared to the previous month. And given that July was very strong, right, after the reopening recovery. So it just tells us that we are close to the end of the reopening recovery. So it doesn't mean that the services are going down. So I think the services should be doing okay in the near term. Well, not better a lot compared to previously, but still doing okay. But of course, overall, I don't deny that the economy is in a very weak situation because of the property sector drag, and the sentiment on the consumers are very weak. And I think what the government should do is that, of course, the official deficit is very small, but actually they've done a lot of borrowing through the local government financing vehicles, and they are spending a lot on the infrastructure. So I think it's really about what's the right way to spend the money. And I think the right way is really maybe provide some consumption support, like what other economies have done. Like Hong Kong, we have like cash distribution, Macau as well. So I think there's actually something that the Chinese government can do, but I think the willingness for that is also very low, given that they probably don't want to make people lazy and maybe spend more on public services, some income support to the unemployed and the low income group. And I think these are the things that the Chinese government should do. But I think right now there's some signs of it. For example, lately they have increased the tax deductions on the childcare and parental care, but the amount is still very small. And they are now cutting the mortgage interest rates even on the existing mortgages. So something that they did in 2008, the last time. So it is shows that there's willingness for them to ease, but the amount is still going to be quite small, I think. Maybe the support is going to be 0.2% of GDP. So I think right now they're still using a rather piecemeal, like gradual approach to try to see like let the economy to stabilize, but not to turn around the economy. So I think that's just to buy more time. And I think maybe in 2024, when if we see that the property sector still does not stabilize, then maybe there's definitely more pressure for them to do more. But I think right now, until the end of the year, they're going to stick with this approach at least. Yeah.
Okay. Andrew, the big news overnight in the markets was the oil price rising above $90 now. It's at a 10-month high. How problematic is this? Does this change the calculations on inflation?
Well, here is a slightly off-the-wall view, because I'm absolutely obsessed with what's going to happen in COP28 in November, December, in the United Nations climate policy. And that is, of course, making oil more expensive. It's a good thing. Less of it is going to be consumed. Now, the impact on inflation invariably works only through one way. Right now, the major use of oil, more than about 28, 29%, is transportation. So it hits, in fact, countries that are particularly dependent on road transport and therefore on internal combustion engine, and that's the United States. So I'm not really concerned about inflation anywhere else, except any potential impact of that in the US. And that's bad news because, of course, it puts even further away the likelihood of stabilization or an interest rate cut. But as I said, it is mixed news. Yeah, make oil as expensive as possible and make people stop using it. It's one of the major pollutants. The other part is yes, it could affect inflation in the States.
Okay, what do you think, Michelle? Is this going to change the calculations for the Fed and other central banks? I mean, some people are saying oil is going to hit $100 a barrel fairly soon.
Right. For Asia, like Korea and Taiwan, we've already seen the upward surprise in the CPI given the rise in the oil prices recently. So I could imagine that if it's going to hit $100 per barrel, then there's more inflationary pressures. But I think I agree with Andrew that among all the economies, the only one that really have the trouble of a potential wage price spiral or upward inflationary momentum is really the US. But right now, we're still forecasting that the Fed has ended the hiking cycle, so no more hikes probably. We don't think that November is it's a likely call because if you look at the employment data, it is softening. But it could be delaying the timing of rate cuts in the next year.
Andrew, what do you think? Is the Fed now on hold, or is it going to have to reconsider maybe in November?
I keep thinking what Powell said. Mind you, he said so many things that I don't know why I'm picking that one, which says I would be surprised if we're looking at inflation at 2 to 3% in the year 25. So I've gone fishing. You know, I stopped bothering about forecasting when the Fed will or won't change interest rates. It won't change interest rates. Still, inflation clearly is for several months down to 2 to 3% and staying there. And this is perhaps not just happening yet. So let's forget about this and do something else.
Okay.
No, we're not going to forecast correctly when the Fed stops or cuts. Okay, so let's do something that we do know and can do. And there are plenty of things that I'm doing.
Thank you both very much. You heard there Andrew Freris, who is the CEO of Ecognosis Advisory, Michelle Lamb, who is Greater China Economist at Societe Generale Corporate and Investment Banking.
Peter Lewis's Money Talk.
I'm joined now by Ross Feingold, who is Business Development Director at SafePro Group over in Taipei, Taiwan. Morning, Ross.
Good morning.
Now, Premier Li Jiang said China and the Association of Southeast Asian Nations, known as ASEAN, have built strong ties benefiting both sides amid strong global changes. He was speaking at the welcome ceremony for the China-ASEAN summit in Jakarta, and he said China and ASEAN have succeeded in blazing a correct path of good neighbourliness and friendship, as well as common development and prosperity as the world is undergoing profound changes unseen in a century. This meeting has been sort of a bit overshadowed, hasn't it, by the G20, which is coming up at the weekend. But nevertheless, I mean, China and ASEAN, this is an important relationship, isn't it? Strong trade ties, certainly between Beijing and the regional bloc.
Yeah, the trade ties certainly are very strong, and a number of the ASEAN countries continue to welcome Chinese investment in a way that we don't see anymore in Western European countries or the United States. Almost kind of goes without saying at this point that they're not welcoming Chinese investment. But the ASEAN countries continue to welcome investment in most cases, and they continue to want to further develop trade relations, whether that's their own exports to China or imports from China. I mean, obviously, though, any discussion about China and ASEAN and the positives that the countries in ASEAN see in the relationship, at some point it gets unavoidable to mention the South China Sea dispute. But then again, this only involves some and not all of the ASEAN countries.
I mean, it hasn't been helped, has it, by this map that China produced that's of sort of an expanded territory that's upset quite a lot of countries, both in ASEAN and also India as well in particular.
Yes, but it does seem that the loudest criticism is not necessarily from the governments in ASEAN, or specifically the governments that have sovereignty or overlapping claims, sovereignty disputes or overlapping claims with China, right? So, yes, the Philippines has been more outspoken in certainly this year than it was in the first few months of President Marcos's administration, and certainly more outspoken versus his predecessor, Duterte. But again, the loudest complaints about the map does seem to be coming from outside the region.
And Premier Li is also going to take part in this so-called ASEAN +3 summit with Japan and South Korea. Japan also wants to have separate talks with Premier Li about the furore over the treated wastewater from the ruined Fukushima nuclear plant. What are relations like between these three countries? China seems to be more upset that Japan and South Korea have been moving closer to the United States and want to try and reverse that.
Yeah, I mean, that troika there, they're not on the same page on a lot of issues. And part of that is a product simply of President Yoon being right of center, and right of center Korean presidents have typically sought stronger relationships with Japan, so he's no different. There's certainly a lot of pressure from the United States that South Korea and Japan would draw closer on security issues. But just in the course of this conversation, right, mentioning that, well, there was ASEAN, then there's the ASEAN +3, and then there's ASEAN and its bilateral meetings, and this week with the representatives of the different countries, the East Asian Summit, and Biden's not attending that, and the G20. Wow, where does it end? Talk about summit overkill.
And there have been a lot, haven't there, at the moment. But are these meetings leading to anything concrete and productive at the end of them? For example, this ASEAN summit, what is it trying to achieve?
That's a great question, and I think I'm becoming a summit skeptic, because a lot of these meetings just produce very similar statements to the previous meetings. And what happened over the past couple of days with the ASEAN meeting specifically with regard to Myanmar, where there was all this attention focused on what's ASEAN going to do about Myanmar. And well, they've been trying to do something, but sort of not really ever since the coup occurred over 2 years ago, and violence continues to grow. So all we see is we still like our 5-point plan, and we hope that it gets implemented. But really, the leaders in Myanmar have not shown much interest in the 5-point plan. And then you'll get critics who say, "Well, ASEAN, you're just so weak." And same thing on trade as well. Even though we just touched on that, how important it is to expand the trade relationship, from ASEAN perspective, with China. But on the other hand, these countries are, a number of the countries are in TPP, or there's the RCEP, obviously. So these meetings this week aren't really the platform to talk about trade issues either.
I mean, there are things they could do, aren't there, that they could work together on climate change, on debt relief, on technology. There are many areas where their differences don't have to stop them working together. But do you see any signs that they are moving forward on some of these issues?
Well, they certainly talk about them, but again, moving forward, often that's not going to happen in via these platforms because, for example, climate change. There's the COP summit. So again, it's not clear the effectiveness of these platforms, and I think we're actually going to see some coming out of this week's events, probably some more complaints about the ASEAN in these big meetings, with whether it's its own internal leaders meeting or the ASEAN plus 3, ASEAN's bilateral meetings with China and the other countries, and the East Asian summit. I'm sure I'm not going to be the only one suffering from fatigue.
Well, of course, the big event over the weekend is the G20 summit in New Delhi. And of course, it's all been overshadowed by the news that President Xi Jinping isn't going to attend this meeting. So how much does that undermine the whole G20?
It's not ideal. If you really want to get something done, or some of the other leaders were going, as much for the G20 as the chance to have a bilateral, just a one-on-one with Xi Jinping for an hour. And I think some of the countries would have liked to have done that if he was there. So sure, it's one of the most important economies, obviously, and people do want to talk to Xi Jinping, and he's not there. And also, the decision was made, relatively late, right, just days away, when some of the other leaders were locked into attending. So it'll be interesting to see if anyone holds a grudge. One thing I'll say, though, is we're probably going to see all sorts of, frankly, silly speculation, unfounded rumors about why he didn't attend. Maybe it was a strategic decision that the Chinese leadership and Xi felt that we're going to get some negative attention wherever Xi goes. There's all sorts of criticism from media. So why bother this time? But again, we're probably going to see all sorts of unfounded speculation by so-called experts about why he didn't go.
Well, there's a lot of it going around. But do you think, on those bilateral meetings, do you think maybe that is a reason why he doesn't want to attend? Because he's got to have these bilateral meetings with a number of countries that are being seen as being unfriendly towards China, like the US, like India, like the UK. So the optics of those meetings are just not going to be very, very good for China, are they?
Well, there certainly would be in those countries, if their leader were to meet Xi Jinping in a bilateral on the sidelines of the G20, there'd be lots of criticism, right? Why didn't you bring up this issue? Why'd you stand there and smile and shake his hand? So there would definitely be that, but there wouldn't necessarily be that, or it's highly unlikely there would be that domestically in China. So again, I think maybe he just felt it wasn't worth it because of again, the negative media coverage outside of China And there's the upcoming APEC meeting, and he's got to decide whether or not he wants to go to that as well.
And what is the role of India in all of this? I mean, India obviously wants to promote itself through the G20, its growing economy. It also seems to be trying to promote a different world order from what China sees itself as promoting. And India sort of sees its role as being a bridge, if you like, between the West and China, doesn't it? It's become very adept at the moment at sort of playing off both sides against each other.
And consistent with the point you just made is also India's policy on Russia's invasion of Ukraine and India's willingness to continue to, frankly, do business with Russia and not join the Western countries in the United States in this most stringent sanctions that those countries have implemented. But at a minimum, if we could just sort of simplify what hosting the G20 means for India, you just want it to go well, right? You just want no snafus to happen, no traffic problems or protests or anything like that. And inevitably, you'll get some positive press coverage because there'll be lots of media in the West that will say something like, this is India's coming out moment, sort of like people said with China when it hosted the 2008 Olympics. So I think for Prime Minister Modi, not necessarily looking for any great agreements or statements from the G20 leaders. And the G20 leaders will probably say the same kind of stuff they say all the time, right? We're concerned about Ukraine. We're concerned about the climate. We're going to work together. So for India, I'd say you could call it a victory as long as the meetings go very smoothly from like a logistical, technical perspective.
But it also needs to come to some conclusion, doesn't it? And put out a statement at the end of it. It's not looking easy that they can try and find some consensus on almost any of the contentious issues.
That's why they'll continue to. The statement will say, we continue to be concerned about fill in the blank, and we're going to continue to work together about fill in the blank, and it'll just be very similar to the previous G20 statements.
And what about in the aftermath now of Gina Raimondo's visit to China? Is there any sign of things improving at all between the US and China?
At the moment, I would have to say no. Nothing was really achieved by her trip, and I think a lot of us sort of expected that to be what the outcome would be beforehand, and that it just crashes up against the Biden administration's endless desire to have dialogue for the sake of dialogue. So they think it's good that she went, but with all the tension in the relationship, the likelihood that there'd be any great outcomes was remote. There are tiny things that one might say are productive for the relationship. For example, the announcement a few weeks ago about increasing the number of flights, and for the business world, that's good. For American companies that still have business in China, then having easier access, making it easier to get there, certainly helps. It adds efficiencies. But that was not announced at Raimondo's trip. Right? It was announced beforehand. So what did she really achieve from this, other than earn a lot of criticism from Republicans in Congress? I wouldn't even say it remains to be seen. I would just say it's probably going to be like Blinken and Yellen and Kerry's trips over the previous few months. You're not going to get much out of it. The differences are still too great.
Okay, well, thank you very much, Ross. Good to talk to you. That's Ross Feingold, who is Business Development Director at SafePro Group over in Taipei.
You're listening to Peter Lewis's Money Talk.
Money Talk.
Thank you very much for listening this morning. Don't forget to take a look at my daily newsletter, which is at peterlewismoneytalk.substack.com. On Friday's show, I'm joined by John Schofield, Managing Director of Tempest Investment, and Sunil Kashyap, Director of FinMet. With a view from Australia is Toby Lawson, CEO at Staten Partners. Please join me again tomorrow.
Money Talk